and welcome to the look ahead for this trading week. Starting off with Greece, where at the weekend we had various press reports saying we had another tough weekend of negotiations between Western creditors and that of Greek officials, where their latest proposals were said to have been turned down in just 45 minutes. Market continues to hang on every word that comes out from various officials, and there have been a lot so far. The key sticking point here still seems to be, from a Greek perspective, any reforms that need to take place on the likes of pensions and wages in particular. We did also have those downbeat comments out of the likes of the IMF, who said that talks couldn't be any further apart at this particular point in time, and that sentiment seems to be ongoing that we've seen so far in Monday's trading session, where European equities were under selling pressure from the open, with the Greek Bund 10-year government bond yield spread wider in excess of around 60 basis points, with the Athens exchange seeing a heavy amount of selling as capital outflows continue to mount from their domestic assets. In terms of looking forward to the Greece situation, ministers are said to be meeting over the next couple of days. This comes ahead of the Brussels Eurogroup meeting, which will take place on the 18th, which is this Thursday. However, it's looking ever more likely that it will be toward more the end of June, and we'll look to get more concrete answers as the real definite timelines start to hit. Otherwise, in terms of this week, the perspective from the US turns towards the latest Fed decision. That will be key focus, given the fact that we'll have the projections from the Fed as well as the rate announcement, but then also the Q&A with Janet Yellen. In terms of where things currently stand, the last projections that were issued were back in March, so we are looking for some slight revisions possibly to likes of growth and inflation, particularly potentially downside for growth in 2015 given how weak first quarter growth was in the US. But otherwise, data points that we've seen most recently in April and May have tended to be slightly better than expected, somewhat more so the non-farm payrolls, which came out at 282,000 most recently, could well push them to sound more hawkish in terms of their outlook going forward. In terms of the current federal funds rate futures, they're still pricing in around October time for the first rate hike. However, the dot plots from March did show around 2 rate hikes possible for 2015, but more so likely that we'll only get one towards the end of this year. So we'll be looking out for that in more detail when the Fed meet later this week. That pretty much so concludes the main things to look out for. So Greece and the Fed taking centre stage, but I wish you all a fantastic trading week.